Welcome to the Ontario Mortgage and Real Estate Insights podcast, your go-to source for the latest developments, trends, and regulatory changes in the industry. I'm your host, Steve Hamoen, here to provide you with insights sourced from reputable news outlets to help you stay informed and make well-informed decisions.
This podcast is brought to you by Real Approved Inc., a trusted mortgage brokerage dedicated to helping Canadians achieve their homeownership dreams. Visit realapproved.ca to learn more about how our experienced team can assist you with your mortgage needs. Let's dive into today's episode. Today we're diving into Canada's housing market and the current cooling trend we're seeing. Steve, it's clear that the market is experiencing a slowdown, but from what I gather, it's not going to be a complete meltdown.
That's right, Janine. The numbers are showing a significant drop in home sales in major markets like the Greater Toronto Area and Vancouver. In Toronto, for instance, sales fell by 23.3% compared to last year, and Vancouver saw a similar decline. But despite these numbers, experts like Karn Tour from Blue Shore Financial suggest that there's no impending disaster.
Exactly, Steve. Tour points out that life continues and people will always need homes for their growing families, regardless of economic turmoil. It's a natural part of life. Families expand and housing needs change.
And while the market's cooling, it's actually opening up opportunities for buyers. Prices are on the decline, with Toronto seeing a 5.4% decrease in its benchmark price year over year. For those who need to buy or upsize, this could be a beneficial time to enter the market at a potentially lower cost.
Yes, and it's crucial for buyers to approach this wisely. Tour emphasizes the importance of not overextending financially. Just because you can borrow more doesn't mean you should. Planning and consulting with financial advisors or mortgage brokers can help ensure buyers are making sound decisions.
That's a great point, Janine. It's all about mapping out a financial strategy. Even though the market is cooling, buying a home remains a long-term investment. If buyers stay informed and strategic, they can navigate these changes effectively.
Today we're delving into the updated continuing education requirements for Ontario mortgage agents and brokers as clarified by the Financial Services Regulatory Authority of Ontario, or FSRA.
That's right, Janine. FSRA has set a deadline for March 31st, 2026 for mortgage professionals to complete their continuing education requirements. This includes specific guidelines on what counts toward these hours and what does not.
Exactly, Steve. Continuing education is divided into two components, conduct and professional development. The conduct component is mandatory for all licensees and must be completed through one of three approved providers, including Mortgage Professionals Canada.
And it's interesting to note that agents are required to complete a 5-hour course, while brokers need to complete 7 hours. These courses are crucial as they reinforce compliance with the Mortgage Brokerages, Lenders, and Administrators Act, as well as maintaining professional standards.
What's beneficial here is that since Conduct CE is delivered through FSRA-recognized associations, individual licensees don't need to report completion directly to FSRA. It's all verified by the course provider.
Right, Janine. However, when it comes to professional development CE, there is more flexibility, but also more responsibility. Agents and brokers must complete 10 hours of technical education by the end of the CE cycle in 2026. These courses aren't accredited by FSRA, so professionals have to ensure they choose relevant courses themselves.
And these courses need to focus on technical aspects of mortgage brokering, such as assessing client needs or understanding legal changes. But marketing or sales-driven topics won't count towards CE hours.
Absolutely. FSRA emphasizes that licensees must maintain their own records for professional CE. This includes keeping details about the courses, such as the name, provider, and number of hours completed, for at least 4 years beyond the cycle's end.
During a recent Q&A, FSRA's David Haw clarified that group viewings of webinars or training sessions won't count unless each participant can verify their attendance. This highlights the importance of individual responsibility in meeting these requirements.
Indeed, an FSRA is clear that there will be no exceptions for incomplete or non-compliant CE submissions by the deadline. With nearly 3,000 brokers and over 14,000 agents in Ontario, staying organized and proactive is key to compliance.
In today's fast-paced mortgage industry, technology is no longer a luxury. It's a necessity. With the right tech tools, mortgage businesses can streamline operations, enhance customer service, and stay competitive. But Steve, what are some of the best ways to leverage technology in this field?
Well, Janine, the recent discussions at the Vancouver Mortgage Summit highlighted some crucial strategies. One of the main takeaways was the importance of integrating digital platforms that can automate repetitive tasks, like document verification and loan application processing. This not only saves time, but also reduces the likelihood of human error.
That's a great point, Steve. Automation can significantly enhance efficiency. Plus, by freeing up time from administrative tasks, mortgage professionals can focus more on building relationships with clients, which is essential in this business.
Exactly, Janine. Another key aspect is the use of data analytics. By analyzing customer data, mortgage businesses can gain insights into consumer behavior and preferences, which can inform marketing strategies and product offerings. This data-driven approach helps in making informed decisions that align with market demands.
And let's not forget the importance of cybersecurity. With the increased reliance on technology, protecting sensitive client information is paramount. Implementing robust security measures and staying updated on the latest cybersecurity trends is crucial to maintaining trust and compliance.
Absolutely, Janine. Cybersecurity cannot be overlooked. Moreover, the summit emphasized the role of mobile technology. With more clients using smartphones and tablets for their financial needs, having a responsive and user-friendly mobile presence is essential. This means developing apps or mobile-friendly websites that provide seamless experiences.
It's all about making the mortgage process as accessible and convenient as possible for clients. And while technology offers numerous benefits, it's important for businesses to remember the human element. Personal interactions and empathy still play a vital role in client satisfaction and loyalty.
Well said, Janine. Balancing technology with personal touch is key to success in the mortgage industry. By leveraging the right tech tools and maintaining strong client relationships, mortgage businesses can thrive in today's digital age.
Steve, let's shift our focus to some exciting news from Dominion Lending Centers, Inc., or DLCG, which recently announced their first quarter results for 2025. It seems they've had quite a remarkable quarter.
Absolutely, Janine. DLCG reported a 46% year-over-year growth in funded mortgage volumes, reaching 16.4 billion Canadian dollars. That is a significant achievement, especially considering the current economic climate.
It really is, Steve. And what's interesting is that despite the slower activity levels in the Canadian housing market, DLCG managed to pull off these impressive numbers. Their revenue for the first quarter increased by 37% from last year, reaching $18.7 million.
That's right. Their adjusted earnings before interest, taxes, depreciation, and amortization, or EBITDA, also saw a substantial rise of 61%, reaching $8 million. This indicates a strong operational performance and cost management.
And it's worth noting that the adoption of their Velocity platform increased across their broker network. It rose from 68% last year to 79% this year, which undoubtedly contributed to their strong margin performance.
Exactly, Janine. Gary Morris, the chairman and chief executive officer of DLCG, attributed their success to their strategic focus on expanding their broker network and the continued adoption of their technology platform, Velocity. This focus has allowed them to maintain robust growth despite economic uncertainties.
And while they face challenges from the broader economic environment, DLCG remains optimistic. They're banking on the strong mortgage renewal market and the recent decline in interest rates to sustain their growth throughout 2025.
Yes, and they continue to expand their franchise and broker network, aiming to educate Canadian consumers about the benefits of using a mortgage broker. This strategy is expected to positively impact their revenue and profitability moving forward.
It's an inspiring example of how a company can leverage technology and strategic growth to overcome market challenges and achieve financial success. DLCG's results highlight the importance of adaptability and innovation in the mortgage industry.
Absolutely, Janine. It's a testament to their effective management and strategic foresight. Well, that wraps up our discussion on DLCG's impressive first quarter results. Let's close out today's episode. Thanks for tuning in to another episode of the Ontario Mortgage and Real Estate Insights podcast. We hope you found today's insights valuable as you navigate the world of mortgages and real estate.
Before you go, a quick reminder, Real Approved is here to make your mortgage journey smoother. Whether you're buying your first home or refinancing, their experienced team is ready to guide you with personalized support every step of the way. Visit realapproved.ca to get started and take the next step toward achieving your homeownership goals. Catch you next time and stay informed with the latest industry insights.